Wes, good to see you. Today we have 4 tips for investing during a recession. Recent market volatility, inflation, interest rate hikes, all in the headlines. So we wanted to walk through a few tips for investing during market downturns. The first one was kind of a question. Is cash really king? Are you recommending that people invest a larger portion of their portfolio to cash right now?
Well, certainly during recessionary times, cash is not a terrible thing. Today, we can actually receive a yield on cash or equivalent investments.
Mhm.
So that's pretty attractive there. And also having a little bit of extra cash on the sideline to get us through these times can provide a bit of dry powder to take advantage of lower prices and say equities during market volatility. So it's not a terrible thing. We wouldn't say take your entire portfolio to cash because, hey, that's a guessing game at that point, and that's not a good formula to have.
Right. Now, next, I always hear that defensive stocks are a really good investment during downturns. What are defensive stocks?
Yeah. So think of things like your utility stocks, consumer staples, healthcare. Those are things that typically do okay during recessionary times, and you want to be sure that those positions are perhaps being able to provide some cash flow back to the portfolio. Aaron, another thing that we oftentimes take a look at during these recessionary times is having really good quality companies in there. So that may
Mm,
be having exposure to things like dividend paying stocks and fixed income, but I'll get to that in just a second. But one of the things that we like to do with the dividend paying stocks is have a basket of them that are really good quality companies with strong balance sheets that have been paying a dividend and consistent dividend for years and years. But these companies pay dividends at different times throughout the year, so they're not all on a monthly or quarterly basis. But we want to be sure that the basket of stocks is built to provide monthly cash flow back to the portfolio.
mhm,
Consistency is certainly key here. And
mhm.
the other item being fixed income,
Right.
we want to have high quality fixed income during these times
Mhm.
because that can provide, again, good cash flow as well.
And does that include bonds?
That certainly does include bonds, and whether that's um, uh, high quality investment grade bonds or also just having, in addition to that, your traditional U.S. Treasuries.
Okay. And now, even during market downturns, or especially during downturns, keep investing. This is known as dollar cost averaging.
Right, it's something that we all naturally do if if we're contributing to our 401k plan
Mhm.
or IRAs. We are buying in at various points. So again, when things feel the worst is usually a good time to put money to work.
Right.
So if you're in that accumulation stage, I think that we look years on out, you won't regret the decision buying equities at prices that are much lower than they were a couple years ago.
And again, this all just comes down to don't react emotionally to these headlines and stick with your plan, right?
That's right. And it's one of the hardest things to keep in check. I always talk
Hmm.
about how, God made us emotional beings. And when it comes to
Hmm.
money, we are very emotional about it. And it's conversations that we have with our clients a lot is kind of reverting back to the plan when these headlines are really nasty out there. It helps keep our emotions in check. That way we don't compound bad mistakes by reacting just off our emotions.
Right. But the important part is having that plan so that you can stick with it. So Wes, if somebody wants to design that plan with you, what's the best way to reach you?
Reach out to us by sending some message to info@patriotwealthnc.com, or you're welcome to give us a call, 919-322-4113.
All right. Wes, thank you very much.
Thank you.